this is something that comes up every day now, right? I mean, starting in '07 and '08, when the real estate went bad, all of a sudden people, just huge widespread foreclosures and short sales, and then subsequent bankruptcies, right? As people just tried to unwind the mess that we all, so many of us got into. And so now what's happening is some of those people are actually eligible again to get back into it, into getting a house and qualifying for a mortgage. And so I just like to kind of outline some of the guidelines for that, right? So, and keep in mind, there's a lot of moving parts to this, right? So, but just general guidelines. Following a bankruptcy as quickly as 2 years, and really all of these are as short as 2 years. But a bankruptcy, 2 years, or 3 years, if you end up going conventional. Short sales are, those are a little trickier, right? So short sales in the conventional world, you put 20% down, you're back in right away. So 24 months following a short sale, and it's literally the date the house transferred from to the new owners from when you sold it. If you have only 10% down, you have to wait 4 years. In the FHA world, 3 years. In the VA world, just 2 years following a short sale. Last but not least, a foreclosure. Following foreclosures, for the most part, you're looking at 3 years. Conventional, 7 years. But there's a lot of situations where you can get them back in 3 years. So the crazy thing is here we are in 2014. People that went through this as recently as 2012 or 2011, if they're getting themselves into a situation where they're starting to think about buying, it's a good time to actually reach out to a mortgage person and figure out what the story is. For more information regarding getting back into the market after following any of these major economic events, please just give me a call.